Ja, herzlich willkommen zu einer neuen Ausgabe SI Talk. Bin noch immer in Vancouver. First Mining habe ich bei mir. Wir haben das letzte Interview im September gemacht und der Dan wird uns jetzt quasi ein Update geben, was es Neues gibt und auch noch gleich vorweg Conflict of Interest. Ich besitze die Aktie. Sie wissen, was das bedeutet. Da muss man besonders vorsichtig sein. Then I said in my German introduction, I have conflict of interest. I'm a shareholder.
And I thank you for that.
Yeah, hopefully.
Long-standing shareholder, too.
Yeah, long-standing
Yeah,
shareholder.
yeah.
And I hope that we are now be in the right cycle. The last 10 years was really not fun.
It's, particularly since 2011, it's been a long
There was only
road.
half year of fun. That was 2016.
Yeah, that's true.
But then the rest was not really
The
the nicest place to be.
Indeed.
But I must say, before we starting with the update, is I was really surprised the last few days how busy it is.
Oh, yeah. Yeah.
It looks like I never saw that these people so busy in the last 10, 12 years.
No,
Also not in the good years.
Yeah. No, I think that's right. I mean, we were by our booth, and I was amazed at how many shareholders who came up. And listen, there's been a lot of long-suffering shareholders of First Mining, but I was amazed at how many shareholders came up that, people we hadn't been in great touch with recently who had been accumulating shares, right?
Mm-hmm.
They've been buying, they've been averaging down, still very supportive. And for our story in particular, the value is just so there, right?
Mm-hmm.
The ounces are in the ground. We've got great established resources. So if someone's really kind of thinking about how do you buy at the bottom when the gold price has already moved and the equities haven't, it starts looking pretty compelling.
Yeah, that is the only frustrating for me. You see the gold price move $300 last year.
Yeah.
We are still in a high range. I think we are now on the edge of the next lift. Mm-hmm. Hopefully we see it's up to the PDSC or goes to 1600, 1700. Mm-hmm. And the equity, or a lot of equities, not moving.
Yeah, no, absolutely. I think you've seen a bit of the moves in the producers, as they always move first. You've certainly seen the move in royalty companies. And this, I think, just reflects the fact that investors have been looking at the less risky assets. And we need to remember how and why gold has moved up to 1550. It hasn't been on great expectation of fundamentals in the gold market. It has been on concern, right, and perception of risk. And the last move was certainly after the latest incident in Iran, which is tragic. But it hasn't been. It's been a fear move, not a greed move yet. And what I think people haven't been focused on is that. With gold at 1550, the free cash flow to the gold industry versus this time last year is doubled, right? Mm-hmm. If you say all-in sustaining cost is around $1,000 for the industry, at 1250 gold, your free cash flow is X. At 1500 gold, it's 2X.
Yeah.
And we are starting to see it ourselves in more interest from bigger mining companies who are starting to look at projects again. Mm-hmm. And they're starting to look at projects again because they have development budgets again, where they didn't really have those in the last, really since 2011, 2012. So it's frustrating that the developers haven't moved because of this continued perception of risk, this continued perception of lack of capital. And everyone says that we need the generalist to come back in and buy mining. We don't need that at all. Joe, all we need is for everyone who's mining gold right now to keep mining gold and keep taking resources and reserves out of the ground. Because once they're out of the ground, they're out of the ground.
Yeah,
right?
That's right.
And we're not making any more of them. No one has spent much money trying to find them in the last 7 or 8 years. A few, exceptions to that rule. But really no productive capacity has been added. It's been, the total lack of capital to the mining sector since 2011, 2012.
You see also with all this M&A activities that big companies going bigger with buying other companies or merge with other companies, but no production increase.
Right. Exactly.
And maybe they sell some smaller mines and think that we cannot handle this, or whatever, or they shut down the smaller mines, then it makes no sense. So it's really interesting.
And on that point, you look at two of the deals that happened in November, I think actually on the same day, both have really important look through to First Mining, right? Evolution buys the Red Lake mine. Mm-hmm. That's right in our neck of the woods, right? Mm-hmm. Springpole is 100 kilometers east of Red Lake, and Goldlund is, about 2.5 hours on the highway from Red Lake. And you look at Evolution's investor presentation, why we love Red Lake, it's because look at all these ounces in concentric circles around Red Lake, and both Springpole and Goldlund are on that presentation. Right? So if you're going to look at regional consolidation, there's only so much you'll do in the Red Lake camp itself. And then you'll start looking outside. We have great projects to develop outside. And then you look at Detour and Kirkland Lake. And all of a sudden, big 1 gram, deposits in Canada that can produce 300, 400, 500,000 ounces seem to have value again. Whereas since 2012, it's actually pretty funny. I was in Toronto in December. And it used to be for the first 9 months of 2019, you'd meet with investors and they'd ask you, so tell me how Springpole is not like Detour. Like really, another big 1 gram deposit that's been hard to make money. It had its commissioning. Tell me how it's not like Detour. I was back in December, and honestly, I had like 3 people say, so is Springpole like Detour? Because all of a sudden, this thing trades for $5 billion. You take out the capital, it's about $3 billion for the value of that big 1 gram resource. And anyone who's actually looked at Springpole knows Springpole's a way easier deposit to mine once we get it built than Detour. Springpole is one homogeneous ore body that, it's like a mining engineer's dream. So anyway, it's both of those are really important factors, because I think it just speaks that there are no real projects, right? No one has really advanced projects. There's a few of us in developers that have been doing, I think a very good job with limited capital and moving these projects through the development curve. But if you really look at what mines can be built that can produce more than 300,000 ounces a year in the next 5 or 6 years, there's just not that many of those around. So anyway, I think that scarcity value starts showing up at some point.
Yeah, I hope.
Yeah,
it should.
Yeah. It should.
And there's also a question always of the gold price. When we really move up the gold price higher again, then I think the companies coming have a deeper look.
Yeah, no, and mostly because they have cash flow. Right, their free cash flow is doubled, as you said before, and they now have budgets to look at stuff again.
So what's happened in September?
Since September, a lot is the short answer. But the major things, we put out our updated PEA on Springpole in October that reflected a new flow sheet that was a result of the metallurgical work that we did in 2018 and early 2019, in which I think have figured out how we can increase the recoveries in Springpole from 80% to the high 80s, low 90s, just through flotation and fine grinding. So the results of that were, as we rescoped Springpole, post-tax NPV of $840 million US dollars at a $1,300 gold price, 800 million upfront capital. 12-year mine life, all-in sustaining cost in the low 600s. Wow. If you look at it on a byproduct basis, it's below that.
What is the byproduct?
Silver. Yeah, about 10% of the metal endowment at Springpole is silver. And I think the really important thing that captured some attention, I think is starting to capture some attention, is that this is one of very few mines in Canada capable of producing 400,000 ounces a year. The average production year 2 through year 9 of our mine life is 410,000 ounces equivalent. This, if it were producing today, would be the 4th largest gold mine in Canada. Like, this is big enough to be meaningful to any producer in the world. And the production of that size and scale is a rare opportunity. There really aren't that many of them. So, that I think came through the updated PEA and have basically moved right into PFS. So we signed what I think is a really good deal with Ausenco, the engineering firm, and we're delighted to be working with Ausenco. I think they're the best group we could be working with to scope this project out. They've done a lot of work in both scoping and building gold projects in Canada in the last 4 or 5 years, including building the plant at Atlantic Gold. So some really good successes. It's a team I've done a lot of work with over the years. So very happy. But that process is now kicked off, and we expect that we'll complete the pre-feasibility study by the end of the year. Lots of interesting trade-off studies that we need to do as we go through that, both in sort of sizing the plant, looking at some different tailings options. But that process is well and truly underway. And interestingly, this is a big global engineering firm, but they have agreed to take all of their compensation for the pre-feasibility study in First Mining shares.
Wow.
Yeah, at a premium to the market at the time.
Wow.
So
that's a big commitment.
That's a real sign of commitment. They don't do this very often. And I think it's because they believe in the project and believe in a path that they can see to demonstrate, some really robust economics on this project. And listen, they want to get involved in projects like this so that they can then help build them, right? They don't make that much money on a study. What they really make money on is building mines. And so that really EPCM or the EPC work is all part of, and ultimately contemplated by this relationship that we're moving forward with. So it's great. We're very excited about that.
Wow.
So that's been going on. And then, the drills have been turning. We wouldn't have had any results when we spoke in September, I don't think, from Gold Lund. We were drilling at the Miller prospect, which, if you recall, 10 kilometers away from the Gold Lund main zone. That Gold Lund main zone is 800,000 ounces at about 2 grams in indicated resource, another 870,000 in inferred and 1.5. But one of the more robust open pit potential projects in Canada. And we drilled 10 kilometers along strike in 2018 at a prospect called Miller and had some pretty interesting results there. So we went to follow that up and followed the structure for about 450 meters. We'd only drilled, probably 150 meters of strike length last year, and had results like 150 meters of, 1.5 grams from surface, 200 meters of 1.5 grams from surface, 40 meters of 4 grams in an open pit target. Like, there's some of the better grades and widths that we've seen in any potential open pit project, anywhere this world. Now, one of the challenges we have with the portfolio in First Mining is that we have a lot of great projects, which is great, but the challenge is we have a lot of great projects that we don't really get to talk about, right?
But also to address money to this different project,
Indeed.
And then you need really deep pockets.
That is exactly right. To do more than demonstrate the potential for them, you really do sort of need a bit of your own dedicated funding sources. And we've come to that realization this year. Our real priority in terms of surfacing value in this portfolio, we believe that you will be able to permit Springpole. And I think when you get Springpole permitted, a project of this robustness, at a $1,300 gold environment with, call it an $850 million US NPV, I mean, that, if it trades up to half of that, which permitted projects should in rational markets, that's still a tripling of our share price or something from here, right? Maybe more, just on Springpole alone. And then we've got 6 million ounces in 5 other projects. So we need to shine some light on some of these other projects, and I think probably get some other talented groups spending some money on them. And so that's been a bit of a priority for us over the fall. A, understanding some of the portfolio projects, and B, trying to find good groups to partner with to help move them forward, so that when we get into the gold market that we think is coming, 1,500, 16, 1,800, 2,000, you have the projects being moved forward. You're not starting to do that at the time when the gold market was.
How a partnership with the other company can look like?
Oh, it can look like a wide variety of things, right? So from our standpoint, particularly on some of the portfolio projects, it could be someone, and we get a lot of these calls just given the quality of the projects, someone calling up saying, well, I'd like to do exploration at one of these projects. So, I'll commit to spend, $5 or $10 million. We'll, drill, I'll earn into the project. You retain an interest, maybe you retain a royalty, some cash and share payments up front. You become our partner and we move the project forward. Things like that, where you can then kind of point to, A, money's being spent on these projects. So you have results that come out. B, you have, we don't have a very big team here. You get a dedicated team working on the project and, the value of it in a public company that you're going to end up probably owning some shares in. And that's really helpful too, right? Because it's no longer just kind of saying, oh, look, Hope Brook is worth, it's got 1 million ounces, it's worth, it's worth $10 an ounce, or it's worth $40 an ounce. You actually have, shares and earning, spending commitment, and some cash payments along the way, things like that.
When you do go find the future, how First Mining looks like then? Is it then? I don't believe, so it's my belief, that you want to bring Springball into production. So in the end, looks like then a holding construction, and you have interest in very companies, royalties, whatever. Is this the long vision of?
It's interesting when you talk about that, Joe. You look back to sort of how Keith and the team articulated the strategy in 2016, when they were really talking about the mineral bank. That kind of was the strategy, right? We're going to buy a bunch of projects, good projects at cheap prices. The cycle is going to change. We're going to find partners for these projects, and we're going to retain interests and or distribute those interests out to our shareholders. So, I think there's a few different ways that it could end up looking like, but it depends a bit on what those residual interests look like. Listen, for Springpole, I would tell you that history has not been kind to single asset companies trying to develop billion-dollar projects, right? So it's probably a rational thing that we would be looking for partners down the track, whether that would look for, an operating partner. Again, you retain an interest, whether in the end, in the right environment, someone just comes to buy the project and you could have some, retained interest. It can look a lot of different ways. But I think the important thing is we have the assets. A lot of people are looking for assets now. So we need to be finding the right partners who can mobilize capital into moving those assets forward, I think. Not exclusively. We have some really interesting opportunities inside the portfolio that we're working on that I think will surprise people. In terms of potential for us to move a project or two forward as well. So lots of different ways, but with a small team, ultimately you need to find.
Can we expect this year on this partnership front some news?
I hope so. Yeah, we're working hard on it. And we've got, like I say, we've got a bunch of projects, and in a market where people are really looking for projects. So that's certainly our goal. And when you think about what we think some of the real news is going to be moving forward here in the next 3 to 6 months, I think some of it will be around that, okay. which is actually helpful, because as we take Springpole through the environmental impact statement process and pre-feasibility, let's be honest, there's just not a lot of news that comes out of that.
That's
right?
the problem. That's the problem. You have normally the lack of information.
The valley, and Value Valley, we used to call it as a private equity firm, and the Valley of Death, we used to call it as project operators.
So that's mean on Springpole we will see in the end of the year a pre-feasibility study. Then you're working for sure on the permitting side. Maybe here coming some information. Then very important, you drill more on the
Gold
Miller.
Hunt. Well, Miller, we've
Miller is part of the.
Miller is part of Goldland. I think we've kind of defined Miller. We need to sort of understand. We drilled 40. We've now drilled about 40 holes there. So I think enough for us to understand what we think we have. It's not going to be a 1 million ounce deposit right now, but the really important thing is with a bunch of newly interpreted geophysical data, we have an enormous amount of data on all these projects, right? We've had some great work being done on geophysics, and that with this drilling at Miller is giving us a much better sense of where do we go target other opportunities in this 50-kilometer land package. And I think what you're going to end up with at Goldland is, we've already got 1.7 million ounces sitting in the Goldland main zone. We're drilling down there now where we think we can add to that in a bunch of parallel zones in the same, basically in the same pit. So we'll see some of those results coming out with some increased definition and interpretation around the Goldland main zone. But then, the rest of the program is going to be identifying and prioritizing what are the other 15 drill targets you'd want to go after on Goldland, because we'll find more Millers, and I don't know if Miller's going to be 50,000 ounces or 300,000 ounces, but there's definitely gold there. But where do you find those that once you kind of find the center of them, you just expand it along, and where do you find the parallel zones like we have at the Goldland main zone, and there's you're going to be exploring on this property for 20 years and continuing to find gold. There's a lot of gold there. So, yeah, we're excited about that.
And also we see some, hopefully, news on the partnership with other companies through other projects.
Indeed. Yeah.
So I think this looks like as a busy year.
It's a very busy year. We're kind of run off our feet right now. It's a very busy year. Lots to get done. But I think, every step we can take in giving people a sense that the assets in the rest of the portfolio that we don't really get a lot of value for, when we can really demonstrate to people that there's real value here, I think that starts getting reflected in our share price, hopefully.
Absolutely.
Yeah.
Dan, thank you for the update.
Oh, it's my pleasure. I always appreciate your support and always love it when you come to Vancouver. So thanks, Joe.
Yeah, but please, next time, a little bit better weather.
Yeah. Let me give you a piece of advice. Yeah. Never come to Vancouver for the weather.
Yeah, that's right.
Exactly.
I know this. Ja, Update. First Mining. Hat sich viel getan. Wir haben am Anfang sehr viel über den Markt gesprochen. Es tut sich hier was. Jeder ist busy. Es schaut so aus, als sind wir wirklich jetzt in dem neuen Markt drinnen. So, das bisschen Frustrierende daran ist natürlich, dass First Mining eigentlich da relativ wenig sich noch nicht im Aktienkurs widerspiegelt. Aber was ganz spannend ist, wir haben sehr viel über Springpole gesprochen. Hier tut sich einiges, da haben sie eine Ressourcenschätzung rausgebracht im November, wollen jetzt gleich direkt eine Pre-Feasibility Study machen. Was extrem spannend ist, die Firma, die Pre-Feasibility Study macht, lässt sich nicht bezahlen, sondern lässt sich nur in Aktien bezahlen, die zu dem damaligen Zeitpunkt höher sogar im Ausgabepreis war. Das ist ein sehr, sehr gutes Commitment für das Projekt. Der NPV liegt irgendwo bei 850 Millionen. Die Aktie selber, glaube ich, hat ein Market Cap von 150 Millionen oder sowas. Also da sieht man schon alleine, wie das eine Projekt groß ist. Und würde das in Produktion sein, wäre es die viertgrößte Mine in Kanada und es geht relativ einfach, sie in Produktion zu bringen. Spannend, also richtig spannend. Sie haben aber noch andere Projekte, Madalo zum Beispiel, wo sie andere, alleine 15 Targets haben, die Gebiete quasi, wo sie die Goldzone erweitern können. Dort sind ungefähr 1,7 Millionen Unzen derzeit. Also unglaublich große Anzahl, was sie noch bringen. Dort wollen sie heuer auch bohren oder sind gerade Bohrungen unterwegs. Das heißt, wir werden neue Bohrergebnisse kriegen. Aber sie haben so viele andere Projekte, die null Value für den Aktienpreis bringen. Und deswegen gehen sie auch so Partnerschaften oder wollen sie Partnerschaften eingehen, damit diese Projekte auch weiterentwickelt werden. Da sind Projekte drinnen, die haben 1 Million Unzen, aber es wird nicht daran gearbeitet, weil sie auch nicht das Geld haben, dass alle Projekte gleichzeitig voranbringen. Es ist relativ unwahrscheinlich, dass die Company natürlich selber Springpole zum Beispiel in Produktion bringt. Das wird ein anderer machen. Und dann werden sie dementsprechend halt irgendwelche Anteile an der Produktion haben, Royalties oder sonst irgendwas. Und das soll dann an den Kunden, also an uns Aktionäre weitergegeben werden. Für mich ist die Aktie eine absolute Katastrophe, was die Bewertung betrifft. Ich glaube, dass die Aktie viel, viel höher bewertet sein müsste. Er sagt selber, wenn die Permitting eigentlich da ist, dann müsste die mindestens so ungefähr die Hälfte des NPVs wert sein und das wäre schon alleine verdreifacht. Und da reden wir nur von dem einen Projekt. Die anderen Projekte, die dort drinnen sind, reden wir gar nicht. Aber ist für mich extrem spannend. Ich verstehe nicht, warum der Aktienkurs so niedrig ist. Ich habe zum Glück ein großes Stück an, so hätte ich die nämlich nicht, müsste ich nämlich dort dazu kaufen. Wenn man an den Goldzyklus glaubt und wenn man in 2-3 Jahren, glaube ich, werden wir darüber nur nachtrauern, wenn man nicht eine große Position gehabt hat. Denn das ist, glaube ich, so eine ziemlich einmalige Chance, die wir da am Markt sehen. Aber es tut sich extrem viel und das Interesse kommt zurück und das ist eigentlich genau das Wichtige. Das war ein Update von First Mining im Jänner 2020 Vancouver. Tschüss und Baba. Thank you.
Dankeschön.
Do you understand something?
Yeah, a little bit.
A little bit. Was it okay?
It was fantastic. All I understood
perfect.
is you're super supportive and you think this is the cheapest stock you can buy in all of the market. So.
That's
Not far off?
Not far off. Not far off.
Fantastic. Thanks.